The information contained in this podcast is not financial nor investment advice. All trades and investments are my own. All opinions are my own and should not be construed as advice. If you do decide to trade or invest in any of the markets discussed, you do so at your own risk. Welcome to episode 16 of the Blockchain Immersive podcast. Thank you for being here. So this has been a busy week. It's actually Sunday, October 2nd. I'm rushing to get this all together, but I should have it out tonight, if not tomorrow. But it's been a busy week and we have a lot to cover. But before we do, I just want to thank you all for supporting Blockchain Immersive and the courses that I have here. I am almost at 3,500 enrolled students between these three courses. And I'm so grateful. Thank you so much. And I have had just wonderful, wonderful feedback. So anyway, let's just get to it because we have a lot to go to cover here. A lot of news and just a bunch of different things. So there was a few pieces of news that stood out to me this week that I thought was interesting. Is this one here? It's Deutsche Telekom, which is one of the big cell phone companies in Europe and probably one of the world because they also own T-Mobile. They're providing infrastructure to support Ethereum blockchain. They're going to dedicate part of their infrastructure to validating Ethereum transactions. I mean, that is huge, huge. I mean, this is a huge company, and they're seeing, look, this is the future, so they're jumping in on this. So that's a big piece of news. The next piece of news that struck me was a U.S. senator, is introducing a bill to protect crypto exchanges from SEC overreach, meaning that he's trying to protect the crypto exchanges from overregulation. Now, will that be successful? I don't know. But there's a lot of push to make sure that these crypto exchanges aren't overly regulated because people know that cryptocurrencies are, it's huge. Adoption is huge and it's growing, and they don't want to be on the wrong side of history on that. So this is a very interesting piece of news. The next piece of news that I thought was pretty big here was a $1 trillion company to accept Bitcoin, Ethereum, Ripple, and crypto for payments. Telefonica, which is the largest telecom firm in Spain, $1 trillion company, is now going to allow people to pay their bills and other services in cryptocurrency. Another huge, huge, huge move. So again, as I'm saying, markets are down right now. The smart money and the smart people are looking at this and they're adopting it big time. So this is why I keep on pushing. It's really the best time to learn this right now. Another interesting thing I saw was this article here. A legendary Google billionaire is backing a radical Bitcoin and Ethereum rival despite huge 2 trillion crypto price crash. So the Google billionaire in question is Eric Schmidt, and he's looking to invest in Chainlink, which is another cryptocurrency. And I covered Chainlink in the Blockchains, Cryptocurrencies, and Beyond course, and I actually showed you how I bought some of that. So it's a great blockchain. It's faster. It can scale better. And so as you can see, despite the market being in the doldrums, billionaires and people, who are smart, who know what they're doing, they're jumping in on this market now because the market has been so depressed. Now, probably one of the biggest pieces of news, and it's not really crypto related, but it's related to the topic I want to cover. Remember, I would say in every podcast, I'm going to cover a topic that's sort of unrelated or a market that's unrelated to crypto. And I'm sure some of you have seen this. On Wednesday, the British pound collapsed compared to the dollar. I mean, I think this was the lowest point in history, if I'm not mistaken. Let me see how many years of data I have here. So far, it looks like it might actually be. Yeah, it might actually be the lowest from what I can see. And look at this. We're already in the overnight trading, and we're already starting to get it to go even lower. So what happened here? What happened to the British pound? And this drove the entire market crazy for a little while. But the immediate cause of the pound's collapse, and it's still moving, is it started on Monday and then it kept on going, was the new conservative government announced that they announced a spending and tax plan, which essentially promised there would be very steep tax cuts that benefited, people who had money, the wealthiest people. And of course, they were trying to also mitigate the energy crisis that's going on in Europe because of the war in the Ukraine. So this caused panic in the market and caused the British pound to literally dump. I mean, just fell out of bed. And of course, the British pound was not the only currency that fell out of bed. The euro also fell and went to historic lows. And I ended up buying a bunch of it on the way down because, these are, I mean, not to say that it won't go down more, but I mean, it's a deal. I mean, you're getting as cheap as you can get it. So that will now port into what I was going to bring up is foreign exchange trading. Now, foreign exchange trading is just another market that you can trade. And foreign exchange is essentially trading currencies. And they usually show up in something called a cross pair. So, for example, there's the British pound against the dollar, the euro against the dollar, the Australian dollar against the British pound, and so on and so forth. So you can invest based on a sentiment, or let's say you feel right now British pound is going to strengthen against the dollar. You would buy the British pound US dollar cross pair. You see, so, and it's a very volatile market, but it's also the largest market in the world. On a daily basis, foreign currency trading accounts for $6.6 trillion on an average day is traded. Not just British pound, but all the foreign exchange. So it's a very active market. All the banks are in it, and literally all the banks are in it. The big hedge funds are in it, the big investors are in it, and it's just a big market. And I love trading it because it's so liquid. You can get in and out really quickly. The only disadvantage that I see with Forex is that, it only trades 5 days a week, and then it reopens Sunday evening, which is tonight. And you can see there's already movement going on here. So if it's Friday and you're on the wrong side of a trade, you can't get out until Sunday night, and you may not even get the best price Sunday night. So that's the problem. It's the same with the commodities as well. Whereas with crypto, you can get out 24/7. There's no limit. But it's a very liquid market. It's a very easily tradable market. I'm not saying that it's easy to make money in it, but it's easy to trade it because you can get in and out very quickly. So I use two services, okay? And I use two different services to trade foreign exchange. My main one is TD Ameritrade, and they have this service called Think or Swim. And you can trade foreign exchange, pretty much 5 days a week with Sunday. And it's just really great. And it says right here, you see, Sunday through Friday. And it's really, really great. They have a lot of technology behind them, and it's a great system. And one day what I'll do is I'll show you some trades, how I do it. So this is the main service that I use. And then there's another service, which I really like, called Nadex. Now, Nadex allows you to trade short-term foreign exchange and other things like the stock indices and the commodity markets and all that. Uh, but it's very short term. So basically, you can trade what they call binary options, which basically says, okay, let's say there's a certain price level. Let's just say, I'm just going to throw out a number. Let's say the euro is trading at 100 right now. Now, you can bet by 3 p.m. will it be above 105? Will it be below 105? And then you can place your bets on that. And if it goes in your favor, you make money. If it goes against you, you can lose the money you put in on the option. And usually it's, cheap. It's like $50 or $80, depending upon where the market is. And you can do this for all these other markets too. And then they also have the weekly one where you can bet on where these markets are going to be in a week's time. And so I like this. It requires less of an investment. Obviously, less investment also means less profit. But, let's say you say, okay, I think euro is going to go up by the end of the week, and you do your analysis. You could put 100 in there, and you could make 50% on your money. You know what I mean? In either in a day or a few days or 7 days. So it's very flexible, but they're mini contracts. They're short-term mini contracts. Whereas with Thinkorswim, you can get in on the large contract where each point is $10. So this thing can go up 100 points in a second. Whereas with Nadex, each point is $1. So it's a different dynamic. But it's foreign exchange is a wonderful market. It's really, really liquid, and you can easily trade it. And this is the daily chart. Each one of these represents a day. And you can see these huge swings. I mean, they're actually really nice. Let's look at the euro for a minute. Euro against the dollar. And you see you have the same, it looks almost the same as the British pound. So you see, look at this, it broke the buck. So now a dollar buys you more euro than before. It used to be the other way around where, you couldn't buy as many euro with the dollar, but now it's the opposite way around. So, and part of the reason also is when interest rates go up, especially here in the United States, it creates demand for the dollar because a dollar, people earn money on their cash with the interest rate. So there's more demand for the dollar. But the problem is with our current inflationary situation, that's not going to be good for us because what's going to happen is our imports are going to be they're going to be pricier. They're going to cost more for other countries to buy our imports here in the United States. So it's a double-edged sword. Yes, it's nice to have a strong currency, but it also really harms the import-export equilibrium. So, and this is in part also because of the Fed increasing interest rates. And like I said in my previous podcast, I don't think that this is necessarily the right thing to do. The way they're handling it, because this inflationary period is a different beast compared to the other ones, and so they're just throwing an old, a tool that worked in other situations but may not work here. Now, will the market stabilize? Of course, it's going to stabilize at some point, but there's still a lot of uncertainty here. I mean, we still have the war between Russia and Ukraine, which is not going well, at least not well for Russia. But it's still not going well for the Ukraine. I mean, Ukraine is, constantly being bombarded, and Russia is constantly in a situation where they have to be bringing in new and fresh recruits. This impacts Europe. This will impact Europe because if Putin says, you know what, I'm going to cut off more of your heating supply, Europe is going to fall into a deep freeze. Unless they figure out a way, and I'm using Europe collectively, obviously each country might have a different situation. They might have to find alternative ways, but in such a short period of time, I don't see how every country could possibly secure its heating and energy requirements so quickly. So I think Putin is sort of counting on that and basically thinking, okay, I'm going to bring them to their knees until they push the United States to ease up on the sanctions. and potentially even pull out of the Ukraine. Now, I don't see how feasible that's going to be. I mean, if the world just stops backing Ukraine suddenly, that's going to be tough. That's going to be a PR nightmare, and it will be a tragedy, because so many people would die and or be imprisoned, just like we saw with Crimea. The world didn't do anything, and people are afraid that that's what's going to happen. Eventually, Putin will outweight everyone, and nothing's going to get done. So we don't know if that's going to happen, but that's what I think he's sort of thinking about too. So all of these things have an effect, especially on the currencies and by extension, the broader market. So that's just something to think about. It's a weird time to be in the market right now. There's no doubt about it. But because you can buy and short sell even the currencies, you can still protect yourself from some of this volatility. But it is, I'm not going to say it's not risky, but it's just something to learn about. I mean, obviously I can't recommend anything. I can just sort of point you in the direction, say, okay, here, you can learn more about this. But there's still a tremendous amount of opportunity here. I mean, there really is. So the next part of this podcast will be the Trader's Corner. I took quite a few trades in Ethereum, and you'll see some of these moves. It is interesting what was going on with Ethereum. It was pretty much dead in the water for the last 2 days, and that'll be it for the podcast. And I will see you in the next one. But stay tuned for Trader's Corner. Welcome to Trader's Corner. So I already sent the newsletter for this week, and but I know that this is something that I'm going to add for the next podcast. And if you recall, I am short from here, Ethereum, and look at this. It went down here. I didn't take profit. I stayed in. It came here. No buy signal was triggered. And it's still technically sell. There's still a sell signal here. But this area here is a sideways trend. This is the trader's nightmare, especially if the range is really tight, which means that there's really not that much range here. And so there's really no opportunity unless you're like buying or selling, hundreds of these, but 10, 15, what I'm doing is, at the tops, I'll do 30. It's still not substantial. Right now, my position is up. Let's see, I got in short at 1336, 20, about $200. But this is so tight right now. And what this is telling me is that a big move's coming. It could be either to the upside or to the downside. Right now, we're headed into like this overbought area, and which indicates that we might hit another snag and this thing will go down, which is what I want because I am short. But it could reverse too, because when we get this tight, it's like a spring that you coil up, so you're coiling it, and then when you let it go, it just blows up to either side. So this could go either way right now. And of course, I'm hoping it goes to the downside because I'm short. And if it does go to the downside, it will make actually Ethereum more, make it cheaper and more affordable. So I'm also going to be buying long term. But that's not going to be part of the trade of the week series, only because trade of the week implies sort of like a shorter term thing. My long-term positions, I just continually accumulate and just put it into my ledger. And if you bought one of my courses, you know what the ledger is. So I guess we'll see what happens. This is the first video of the Trader's Corner for this next podcast session. And I suspect that as we pass through the weekend, again, there's also a holiday coming up, a Jewish holiday. After that point, I think we'll start picking up volume again, and then we'll see if there are any other trades available. I'm going to stick with Ethereum this week and just see what's going on. I will see you in the next video, which is probably going to be tomorrow. See you then. Hey there. So I just wanted to give you an update on that short trade that I had. So remember, I got in here, and because it was bumping against the red line, so I thought it was going to correct, and it did correct. I did not get out here because I was waiting for a signal to get out, essentially, but it came back, bumped again, and this time we did get a signal, not only to get out of the short position, but to reverse it. So now I'm long 10 Ethereum, but I got out of my short at 1384. So I got in at 1336. So I took a loss on this trade, and I took about, let's see, that's 48 points times 10. I took a $480 loss. Now, if you remember, in the last trade, I made about 190, and the one before that, I made 2,000. So it's great. I mean, this is fine. And you're always going to have some losers as long as you're ahead of the game. And I'm actually happy I lost on this trade, believe it or not, because I wanted to show you that you're going to lose on trades. I mean, it's part of the game. It's part of how this works, so you're not going to make 100% on all your trades. You're not going to be 100% correct. And really, the key is not to be 100% correct, but to be ahead of the game. So in this case, I took a 480 loss, but I'm still way up. And that's what counts. So if let's say you took 10 trades and you lost on 8 of them, but you did well on 2, but those 2 made you more money than you lost on those 8, that's good. Remember, it's not the percentage of winning trades, it's how much you make in the end from all the trades combined. So if you're up, that's what counts. I don't care how many trades you lost. If in the end you're up, that is what counts. And so that should take some pressure off. And so then you also won't get obsessed with percentages. Oh, I'm 80% correct. No, even if you're 20% correct, if you make money and not lose money, that's all you should care about when it comes to the trading. Now, the fact that I reversed the trade is because I have a buy signal. Now, usually I'll go in with 15, right? But this time, again, I went in with 10, 1x margin, because we're really on these upper limits here. And so, I'm afraid, did it overextend itself too quickly? So I'm playing it a little cautious. We are at almost at this same level. So could it possibly pull back again? Yes. And if there's a sell signal, I'm going to take it and reverse it again. So, and actually would be a safer bet. But we'll see. This thing could run up even if it is on the upper levels here. So I'm just going to ride it out. Again, I'm really happy that I actually lost on that last trade. You get an idea of this is the reality of trading. You're gonna lose some as long as you're ahead of the game. All right, so I will update you on this trade too, and this will probably be resolved before this particular podcast comes out. Hey there. So the system told me that I should get out of this trade. So I took a little bit of a loss here. I lost 11 points. I got out. I covered my long position at 1373.87, and I took an 11.32 point loss, which is on 10 contracts. It's $113.20. And remember, we're still well up, even despite this loss and the previous one. Now, I don't have a sell signal yet, but I will take it. So you remember in the last video I said, I was concerned that we were sort of way overbought, but I took the trade anyway because I got a signal to do so. So it told me, be careful, come out, get out around this point right now, and that's what I did. So if we do get a sell signal, I will short this market again, assuming that we're still in a pretty overbought area. So my initial gut feeling was that it was a little bit too risky, as I said in the previous video, and I was right. But it cost me, which is fine. Again, we're up quite a bit. So I will keep you posted if there's any short sale coming up. See you then. Hi, I just wanted to update you on this Ethereum trade. Good thing I followed my instinct here and got out at 1373, only with what it was 100 and change loss, because Ethereum is collapsing at the moment. Now, luckily, if I had gotten out here, I mean, I would have taken another $500 loss. Thank God I didn't. But remember, I said earlier that, I was nervous about not only this being oversold, but we were about to come back to this area and pull back. And that's exactly what happened. Now, the reason why I got in is because I got a buy signal. And that's very important to keep in mind. So even though I had other things that were telling me, maybe you should be careful, and I did mention that in the video, but at the same time, I wanted to follow my system because, first of all, one, it's worked for me, and two, it's important to be consistent with your system, even if it gives you a false signal. Now, the thing is that we still haven't had a sell signal here yet. So technically, this buy signal is still valid, but it does have here the take profit, which you have two options: either take profit on part of your position or get out completely. Now, because I got in a little bit higher, my take profit ended up being a loss if I had gotten in a little earlier. And the reason why I didn't get in earlier was because I wasn't awake for the alarm. That happened at pretty late. And I went to bed pretty early. But in either case, it's still a valid buy signal, but I'm not going to touch this. I am not going back in this thing until we get an actual sell signal here. Now, is this a legitimate sell-off? It could be. It could be. But I'm not going to sell this until we have a sell signal. And the reason for that is what happens if this is what they call a fake out. And a fake out is when the market moves very abruptly in a certain direction. Everyone piles in thinking, okay, it's moving in this direction, and then it rebounds. And that is a risk. Like if you look at this low here today, we have a low of 1320. We're back at 1327. I mean, that's not a lot, a big difference, but we don't know if this thing is going to come back up. You know what I mean? So this is a very iffy area. I will not ever go short this until it actually says sell. That's it. So I'm happy I got out here because we did have, like I said, a nice sell-off, and we are overbought here. So I suspect there could, if it continues staying in this range or even going a little bit down, I do suspect we would get a sell signal. And then I will be very confident in taking it, and I'll probably go in with 15 at 2x margin. So I just wanted to update you on this because this is actually a pretty big development. And good thing I followed my instinct and got out here because these were so overbought. So I prevented me from taking another $500 loss. I only limited it to 100 and change, whatever it was. I think it was 120 or 130 on that one. So yeah, so this is the market. This is how it is when you're trading like I am, and I trade every day, on if it's this market or another market. So I have this type of stuff, on my screens all the time. Now, I'm not in front of my screen every single time because I get alerts on my phone, and I need to be awake for them, of course. But when I'm awake, I mean, I just put the trade in on the phone. You know what I mean? I don't have to be sitting here. And in some cases, if I'm really busy, I'll bypass a trade. I mean, look, there's trading opportunities all the time. So, if you miss a few, you miss a few, even if it's a good one, you'll always have good ones. You'll always have good ones. So So that's it for this video. I'm suspecting the next one will be a sell signal, but it might not. We'll see. Okay, so we did get a sell signal. I short sold 15 Ethereum 2x margin at 1311.28. And that was pretty low. It wasn't the best price I could get, but I didn't want to get in without a sell signal. We are still overbought. So I think that we have room to move down. I think the bears are trying to get this thing back down to like 1237 because now we're pretty much in a downtrend. We had this little blip. The bulls tried to make it but failed. And so we have this sell signal here. So we'll see what happens. I will update you if anything big happens. Now, if I get a, take profit down here, I might do it. Might get out of half of it, or we'll see. But as long as these are overbought like this, I'm going to ride this out until at least these lines go down to at least close to the bottom. So we'll see what happens. Again, short 15 Ethereum 2x margin at 1311.28. And I'll update you shortly. Hey there. I just wanted to update you on that last trade. Unfortunately, we didn't get out of the trade before the end of the week, so it's going to roll over into the next week. If you remember, I short sold at 1311.78. Remember, with this big day, it actually came down very nicely, but I'm still in it. It's now 1274, so that's about a $555 profit. So I made up for most of the loss on those other two trades. So that's good. It's always good to make up what you've lost on those trades. And we were already up to begin with, so not too bad. But again, I'm still in it. So obviously anything can happen. Things can reverse. And so this will probably be part of the trade of the week this coming week. I don't know, because this is really the resolution of a trade, but we'll see how it is. But that is it for this podcast. The next podcast, I'm going to obviously do more news and trade of the week. And I'm going to cover this very, not many people know about this particular bond that the U.S. government issues to mitigate inflation. Not many people know about it, but it is something very, very cool. I'll see you then.